3, 2, 1, and we are live. Good afternoon mga ka-PDAX and welcome to a special edition of our weekly webinars which is called Crypto Convos. For this week and for every month, we invite speakers to come join and talk about the markets, no? And uh, I hope everyone is safe first and foremost. Napa-excite ako dyan. Pero comment naman kayo dyan if nasa bahay ba kayo or nasa office kayo. And where are you guys watching from? No, we'd love to hear that. And as we said earlier, Crypto Convos is a weekly or a bi-monthly event that we want to invite special guests over to talk about their insights and what they have in store or whatever they want to talk about with us. No? And before I introduce the speaker and the topic that you've all come watch, I'll just briefly introduce myself. My name is Kyle. I am from PDAX, which is the Philippine Digital Asset Exchange, where you can buy and sell cryptocurrencies such as Bitcoin, XRP, Litecoin, Ether, and kung ano pa ba man. No? So you can get started and trade at pdax.ph. And you can also download our app on the Google Play Store, Apple App Store, Huawei App Gallery, and so forth. No? And yeah, I think before I introduce my guest, I'm just going to start and present a disclaimer, no? Which we do at every start of the webinar. So looking at the comment sections right now. Hello, Christine. Hello, Joel. Hello, Haji, Joselito. Hello, Javi. Hello, Isaias, CoinFem, Steve, Christine. Thank you for joining. Comment naman, like naman, and share. You know, this is a bunch of information that is available, publicly available, because and made possible by our friends from Open Journal, whom I will introduce more in a bit. No, so just to give some disclaimers, let's get right into it. The views and opinions that are expressed in this webinar are only that of the presenters and do not necessarily the company's views. The statements being made are not to be treated as investment or financial advice. Please exercise caution when buying and selling cryptocurrencies. They are as they are highly volatile. And so I introduced what we are. PDAX is the BSP licensed digital asset exchange that allows Filipinos to buy and sell. Here's our full list: Bitcoin, Ether, Litecoin, XRP, Bitcoin Cash, USDT, USDC, Chainlink, Uniswap, GRT, which is the Graph token, Engine Coin, Basic Attention Token or BAT, and Comp, no? And much, much more in the future. No? As we said in our campaigns before, this is only the beginning, and we really want to offer more in the future. No? So you can get started at pdax.ph. Last Friday, we mentioned that we have a Refer a Friend program, and we're happy to announce that since the start of August, it has finally begun. Refer a friend and gain up to 10,000 pesos worth of Bitcoin from August 1 to August 31, 2021. No? There are more mechanics. You can find it on our Facebook page. You can just search facebook.com/pdaxph, and then we have a post about this Refer a Friend program. So if you want to take advantage, why not? No, refer your friends, make people join, you know, earn some Bitcoin in the process. And baka next month, dumoble yung value ng Bitcoin. So essentially, you would have earned 20K. Again, not financial advice, but I mean, it's free, right? To just refer a friend. So why not? No? And finally, we are on Shopee Mall yet again. You can buy crypto on Shopee, no? So Shopee, pero yung notification PDAX. So ganun na yung ano natin. You can use coins or whatnot on your Shopee to buy crypto and redeem it on our platform, right? So without further ado, let me just introduce our guest, no? I'll just look at the comment section, see dumadami na rin tayo. Hello, everyone. Hey, Matt. Hey, Joyce. Hey, Nat, Evan, Joel, Trisha. Thank you for watching. And we really excited to share what we have today. No? So today's guest or our guest speaker, our regular speaker is none other than Josef Singson, who is the co-founder of Open Journal, and he'll be sharing with us his thoughts about uh, the current market outlook. And syempre, I think everyone's been looking forward to the EIP 1559 hard fork of Ethereum. So I think he's going to talk a bit briefly on that. No? So without further ado, I'm gonna just introduce here Joseph. Joseph, thank you for joining us.
What's up, Kyle? Good afternoon. Thank you. Thank you for having me.
Well, and thank you for
Kamusta?
uh, exciting. Nag-pick up na naman tayo sa market, no? Things are looking up again, or so it seems. So I think we're excited to hear your thought because is this another case of the buy the rumor, sell the news kind of thing, or is this a uh, continuation of our on our journey to the moon? So
Right.
I'll
We'll
just
talk
give
about all of that today.
yep. I'll give
Game. So,
game.
without further ado, let's begin, guys. Good afternoon and happy Wednesday, mga ka-PDAX, ka-Open Journal, ka-Investa, and all of you taking time to be here today and learn something new. Many thanks, PDAX, for this opportunity of learning and for us to help add value to the community that you guys have. So, just a quick introduction to those of you who are attending this for the first time. Our crypto convos or crypto conversations is going to be or it actually is a recurring monthly series by Open Journal in partnership with PDAX. So maraming salamat PDAX for this opportunity. And to those of you who have been joining us again and again, maraming salamat and happy to see you guys here again, our constant loyal supporters. Just a quick background and overview of Open Journal. So Open Journal is a private access subscription which was founded by Javi Medina, aka Taylor, and Matt Flores back in 2019. And it essentially is private access to our fund where we manage money professionally as licensed portfolio managers, trading cryptocurrency and local markets. I think Matt or Jessa, you guys can put some relevant links over in the comment section for people who are curious to know more about Open Journal and how we manage assets in partnership with PDAX and Investograms. So, without further ado, we'll begin our topic today. So guys, palakpakan po tayo for this monumental milestone for Ethereum, which is EIP 1559. Si Ethereum po yung may birthday today and we have to celebrate this milestone in the blockchain. And we're going to talk more about it, what it is, what are its misconceptions, implications, what will happen moving forward, or at least what is our bias when we dig deep and go and look at the charts. Game. So, first and foremost, definition of terms muna. Pero guys, just to set expectation, I am going to make this as simple but value adding as much as possible. So whether newbie po kayo in cryptocurrency trading or medyo may experience na kayo with blockchain technology and the markets, this is going to cut across all of these segments. Pero don't worry, hindi pa to magiging parang classroom textbook definition. We're gonna go straight to it and really get the meat of what this really is. So, for those of you who are hearing it for the first time, EIP 1559 is an Ethereum improvement proposal. It's a proposal to improve operations for the Ethereum blockchain, and medyo importante po siya because think of any kind of project or any kind of business that has a certain plan for improvement. Syempre, may mga changes po yun for the people working in that business, for people who are consumers, stakeholders, or business partners for that business. So, EIP 1559 is a major update na kasama in this larger grand event of the London hard fork, and it's scheduled today, maybe technically tomorrow since it's following US time, but it's something quite important. And essentially, what it's going to do is it's trying to make more efficient the gas fees of Ethereum. Because to those of you who have been trading cryptocurrency or participating on the Ethereum blockchain, whether it be through play to earn games or buying NFTs, we're all aware that there's a problem in status quo. And today, medyo there are instances where the gas fees are quite high, right? And what this proposal is going to do is it proposes a base fee which is algorithmically determined to be able to smoothen out or at least make less volatile the rate of change of the gas fees. Kasi yung problema natin in status quo, the current auction style mechanism, which Ethereum prior to this update uses, it leads to overpayment to miners. So for example, if I'm a DApp or I'm a user with a wallet, there are certain options to send out a fee when I'm trying to process a transaction. May small, medium, and large fee. There are also instances where you can arbitrarily put on whatever fee you want. But the problem here is there are a lot of instances, majority of the time, where you end up overpaying the fee, which normally would cost less. And we have to understand that these gas prices or the fee prices really wildly surge given surges in demand for the limited block space in Ethereum. So supply and demand lang yan, guys. And just like price action, which fluctuates up and down, may mga surges po dun, this also is present in the status quo when you use the blockchain and transact and pay a respective fee. So if you take a look at this chart in the lower left, this is the average transaction fee of Ethereum since the beginning, right? Or since that data presents itself. And you can see huge spikes both up and down. And if we take a closer look at the year-to-date data, it's also present, especially in that peak between May and June, where we saw cryptocurrency and Ethereum have that short-term top, and we had so many people transacting, whether that be on the buy side or on the sell side. Yung gas fees po natin denominated in gigaway or gwei or gwei or however you want to present itself, which is essentially a denomination of Ethereum. So gigaway or way is to Ethereum what satoshis are to Bitcoin, what pennies are to $1. It's a way to denominate it in a smaller divisible way. So generally speaking, what we see here is that there also are peaks and troughs. And these surges in demand and supply, which is prevalent and present in price action, also carries itself over to the gas fees. And if that is the only thing that you would take away or understand from this particular presentation, that is the primary spirit and crux of EIP 1559. It's related to the gas fee structure and system, and it tries to make it less volatile, more predictable, and more sustainable. But furthermore, you might be wondering, why are the gas fees, at least for Ethereum, changing so much, or why is it so volatile? We have to take a look how the blockchain space and how Ethereum has been growing and developing year to date. We need to take a look at how Ethereum is the largest NFT ecosystem. I'm sure all of you are interested and have heard about NFTs, whether that be through play to earn mechanisms or whether that be through NFTs per se, like CryptoPunk, like NBA Top Shot, or like the different marketplaces like OpenSea and Rarible. These have been gauging a lot of, or have been gaining a lot of traction in the ecosystem, and a lot of this hype as people participate in buying and selling, in auctioning, in bidding, these different kinds of things also largely contribute to the blockchain traffic for the Ethereum blockchain. And as a consequences, not in a lockstep way, but gas fees are also increasing and decreasing when these things happen. And if we take a look at what this landscape really looks like, you can see here the top 10 largest marketplaces for NFTs. And it's quite interesting to see how Axie Infinity is now number 2, given that in Southeast Asia and zeroing in the Philippines, it's a hot and interesting kind of mechanism. You have people who are quitting their work or their day job to now full time play Axie Infinity as, let's say, a scholar or a manager managing his own guild. And it's quite an interesting development in the space. And all of this participation and all of this interest contributes to the traffic on the blockchain. Now, in order to further understand even more what EIP 1559 is, we need to take a look at certain things it tries to accomplish, like goals or principles, and then certain misconceptions about it. And these misconceptions were things I would see on Facebook, on Twitter, even in certain traditional news broadcasts who have some sort of a misconstrued understanding of this proposal and how it's going to roll out. So we need to take a look at what are the core benefits of EIP 1559. So like I characterized earlier, it makes transaction fees or gas fees easier to estimate, and it improves and creates a symbiotic relationship between Ethereum, the Ethereum network, and all of its users. Whether you're someone using it because you're running a dApp or you're participating in staking or something like that, or you're a miner or validator. And last but not the least, it allows for more reliable transaction inclusion, because given the instances where gas fees are quite high, sometimes people are unable to have their transaction included because they're not able or they're unwilling to pay that huge premium for the gas fee. I remember, I think there was one time where I was interested to bid for this particular NFT, but the gas prices and all of that were quite too much, to the extent that it cost more than the actual NFT. So I decided, Danes na, I just pass on that. Now, these are two really important things we have to talk about. Two huge misconceptions of EIP 1559. So let's talk about the first bucket first. So, Joseph, are you saying that in the long run, gas prices are gonna go lower because of EIP 1559? That's what I'm seeing on crypto Twitter, what I'm seeing on Instagram, etc., etc. And the simple answer is no, not necessarily, because that's not the intention of EIP 1559. I'll characterize that more clearly later on, but simply put, the goal isn't to reduce the gas fee per se, but make it something less fluctuating, and as a result, make it easier to estimate for people participating in current and future transactions. We'll take a look at how this breaks down later, and we'll take a look at how it becomes easier to estimate as well, because this is just the tip of the iceberg. The second misconception is that I understand that in EIP 1559, a portion is going to be burned. You're going to hear that a lot. So people are now assuming that it's going to make Ethereum deflationary as opposed to inflationary when it essentially has a theoretical infinite supply, as opposed to Bitcoin, for example, who only has 21 million ever existing, and the world is just going to have to divide that and see what happens, as people are going to be willing to pay more or less of a premium to participate in that degree of scarcity. But going back, does it make Ethereum deflationary given that a portion of the fees are going to be burned, and as a result, the total supply is going to be less? Again, no, not necessarily, because the rate in which the base fee is going to be burned is not enough to make up or be at parity with the total issuance of new Ethereum. Yes, there's going to be burning, but not to the extent that it's going to catch up and make Ethereum deflationary. This is going to look a bit clearer in the next slides when we map out how this new cost structure is going to look like. And by extension, another misconception is that some people assume, so this is like a seeded assumption and presupposition, when they say, oh, since it's going to lower gas fees, then it's going to solve the scalability solution for Ethereum. And again, no, not necessarily, because the first portion of that presupposition isn't true. It doesn't necessarily lower the gas fees. And as a consequence, I personally believe that certain sidechain projects like Matic, for example, are still quite important in this ecosystem moving forward, since these sidechains are going to essentially contribute to alleviating or improving the scalability solution, which is an opportunity for Ethereum to improve upon and potentially could be a headwind in the future. So, Joseph, I kind of get it now. How is this proposal mechanized, right? So, wall of text, don't worry, I'll walk you through it. So, three important major changes by EIP 1559. Number one, the fee structure. We'll talk about that later. We now have a base fee, a priority fee, and a max fee. Number two, we'll also talk about later, variable block sizes, meaning the blocks part of the blockchain can increase and decrease in size depending on the load of the blockchain at that time. And thirdly is the base fee burning, which I touched on earlier. And to be specific, it's going to be the base fee burning. So those are the three major changes. Let's now talk about them one by one and how they interact with each other and how this changes the landscape moving forward. So in terms of fee structure, right? Three parts of the fee. You have a base fee, which is now calculated by an algorithm, which is essentially going to be the minimum gas price required for a transaction to be included in a block. It's a variable thing and it's set by the protocol. And this is also the portion of the fee that is going to be burned, hence contributing to a small extent to lessening the supply, but not to an extent that it becomes deflationary. Number two, your priority fee, or what is more commonly known as the tip, which you are willing to pay to a miner to process the transaction. So think of it like equities. It's like a bid and ask board. So the higher the tip, the more of an incentive a miner has to prioritize your transaction in the queue. So miners are still going to get this priority fee or the tip, but it's essentially variable depending on the extent that the user or the person transacting chooses to give. And this ties back to what I said earlier about how this particular tip is now going to be less volatile, given that before it's uncertain how much we have to pay to guarantee the expediency of our transaction to be included in the blockchain. So there's a sort of refund mechanism, which I'll discuss a bit later, that mechanizes that. The third portion is a max fee. So think of this like a limit in the sense that you now have a threshold which you're willing to spend in totality for that transaction. So another interesting aspect is that you now get a refund. So your refund, as you can see on the upper right, is your max fee, which you arbitrarily set, minus the base fee and the priority fee or the tip which you set. So it's not like before where if you pay an excess of what is really needed to process your transaction and add it to the block, you now get a refund for that. And similarly, as this proposal is carried out, syempre, users, dApps, people using it have to upgrade, whether it be a wallet or any service or infrastructure provider has to upgrade their system to support this new improvement. But the good thing as well is that up until they do that, they can still participate moving forward and still can transact in Ethereum in the blockchain. But the downside is that there's no longer a refund if the user overpays. And that in and of itself is a incentive to comply and upgrade your own system or your own back end to comply with this improvement proposal so that people in that network can participate in the refund. So this also alleviates the pain point for consumers transacting who, like I mentioned earlier, end up paying a premium when it's essentially uncertain to them or it's hard to ascertain what is the average price for this transaction, which is now solved by the base fee which exists. So in this singular slide, on the left, you can see the old transaction. On the right side, you can see an EIP or post EIP 1559 transaction where you have the same base fee, but at least the tip is essentially less and you get a refund from what you initially would have just spent out prior to this proposal. So CoinFem is right in the sense that miners are going to be affected by this. I'm not a miner. I haven't spoken to miners in quite some time, but generally speaking, that demographic is not too happy about this, given that this to a large extent reduces on average what they would get per transaction. But it's really up to the miner how they would move forward. Guys, that's a whole nother discussion on mining. Ang dami-daming variables to consider regarding mining. And despite EIP 1559 being an arguable headwind for these miners, there are so many other variables that they have to consider whether or not they would resume or halt their operations, like the legality of it in their country. Is their local or national authority trying to crack down and ban it? The cost of electricity, where they're from, the rising prices of their GPUs and hardware that it would take for them to participate in mining, the price of Ethereum, would I continue to mine Ethereum or bibilin ko na lang yung asset? So it's not a black and white answer as to, okay, it's absolutely bad for miners, it's gonna screw over mining. Well, that could be the direction. It's really up to the individual miner or group of miners or mining pools how they would adjust to this kind of development for the blockchain. Now, this is the kind of cool part, right? Again, seems nosebleed, no worries. We're gonna dissect this and talk about it. So on the diagram on the left, the upper portion, it shows how in instances where you have a surge, you have a sudden increase in block space demand, tataas yung giveaway, right? Your gas fee is going to increase and you have to pay a premium in order to be included in that block and have your transaction progressed. And conversely, you can see how that gas fee decreases when you then have a decrease in block space demand. If there's not so much traffic or demand for it, and you have essentially an abundance of like validators and people to help facilitate that transaction. Generally speaking, gas prices would kind of go up when we see more volatile price action, when you have more people trying to buy, more people trying to sell, more people participating in whatever way, shape, and form in the blockchain. Now, what's cool is on the lower portion, after EIP 1559, is that it's now a variable block size. To put it simply, the block size can expand or shrink depending on the degree of traffic or demand at a particular time. And as a consequence, that makes the gas fee more sustainable and less volatile, given that when the block size expands to an extent, the gas fee is going to increase. But in instances where kaya naman mag-compress, then maybe the gas price would go lower. Not in a lockstep sort of way, but it becomes a bit more flexible for the block in and of itself to expand and decrease, and the gas fee to sort of not parabolically have to increase or decrease in terms of the rate of change to participate. So, as characterized earlier, the priority fee or the tip is given to the miner. Then the base fee, of course, is burned and removed from circulation. So that is sort of the context or analysis which people automatically assume makes it deflationary. But now, as we characterized, it wouldn't be enough to make up for the new Ethereum issuance, then not necessarily going to make it absolutely deflationary. So that's it about EIP 1559. And if I were to wrap up that section, you might be wondering what's going to happen, how will it affect price, to what extent is pricing in already this update that's going to happen. Don't worry, we'll talk about that later in the last portion when we talk about a look at technicals, taking a look at the chart, and trying to get a feel of what it's telling us. But first, let's take a look at under the hood, some on-chain metrics to look at traffic for Ethereum. So at least a monthly view on transactions for the Ethereum network, maybe the past 2 months. So that's June and July compared to when we saw that short-term top when things were all going to the moon and when everyone was happy. It's kind of on a downtrend, but generally nothing that would be too concerning compared to the average over past periods. Same thing really for number of active addresses participating on the network. If you guys are wondering, August, but ang baba, why is it just such a small candle or such a small data point? Because the month just started. But in terms of taking a look at the past quarter, June, July, less compared to the time we were at the top, but again, nothing too concerning. Generally, still people participating. Same thing as well with new addresses, but to an extent, June and July were quite less compared to the average, but we'll see how these play out. So the importance of taking a look at on-chain metrics, which you can check out using the block or on Glassnode, that also has access to on-chain analytics and more robust information about that, is it's like a look under the hood. Kumbaga, fundamentals of a particular blockchain or a particular project to see what's happening. And that's kind of something that people who are new to the space or people from Fundo world who are new to crypto are like, huh? There's no way to value cryptocurrency. There's no modeling and data for that. It's largely speculative. Hanggang chart lang yan. No, you have access to things like on-chain metrics, of which on-chain analytics can come from to be able to create more robust metrics of understanding what's really happening from a quantitative perspective. Now, let's take a look at the interesting part, right? I'm sure you guys are all excited. What's the outlook? Taking a look at this chart of Ethereum. Joseph, priced in na ba or hindi? This EIP 1559 we are talking about? Well, the short answer is it really depends. Both could be true. If we were to benchmark from what we saw with Bitcoin and the happenings we've seen in the past, where from experience and experts and pundits would say half or 50% of the move is priced in prior to that catalyst coming to fruition, and then the other 50% kind of happens later. So at least over the past 12, 13 days, we saw green days for Ethereum in that short-term counter rally higher. And could we pull back or consolidate from here? Yes, maybe we could retest 2200 or that area where the EMAs are forming some sort of support. But I wouldn't be surprised if we go higher from here because of the next chart I'll show you, which is ETH BTC. But generally speaking, and this is a characteristic even of Bitcoin and cryptos across the board, it's just basing out, right? It's consolidating, it's finding some sort of range and support, nagpapahinga siya, and we need to see clear support or consolidation before an up move higher, maybe to retest that previous high or break past it and go above and beyond. At least in the short term, we're still basing out. And just wanted to note, just in case you guys saw this on Twitter, I think Peter Brandt, he was putting side by side the Ethereum chart and the Tesla chart. And he was alluding that ready na si Ethereum to go up to the moon, just like what Tesla did, given that in his perspective, the charts look similar. Well, if you take a deeper look at it, and this is something that Javi and I were discussing earlier, if you take a look at the Ethereum chart, right, there were 3 tests of support, right? 3 tests. You have the first test of support, second test, third test, and this range clearly becomes an important support level. But if you take a look at the Tesla chart, it's just 2 tests. If I'm not mistaken, you can take a look at it on Twitter. But the point being, they're similar, but not really, given that Ethereum had another windup. And the reason why I said I wouldn't be surprised if we can move higher from here, it's because of the ETH BTC chart. Isn't that kind of interesting, that volatility contraction? And currently, we're at a resistance level. So if this were to be breached in the coming days or weeks, then from a probabilistic perspective, Ethereum would outperform Bitcoin with that regard. And as a result, display relative strength compared to Bitcoin, the major. So again, it can go down and correct and consolidate a bit more, but I wouldn't be surprised if we see positive sentiment and fund flow come in the coming days, weeks, or months to be able to break out from here and maybe retest previous highs or hopefully go above and beyond that. Now, what's important to note in this environment, and this is talking about the crypto space in general, like I characterized, a lot of things are basing out, consolidating, moving sideways. This is where we can find leaders. Leaders showing relative strength, leaders pulling away from the pack of Ethereum and Bitcoin and all of the other heavyweights. And these leaders won't feel like leaders per se. They're going to kind of feel like outliers. And this is something that I and our community, our firm, we take and learn from Mark Minervini, that in instances pag down yung market or sideways, we're going to see these leaders emerge. So from an asset allocation perspective, if you're a trader, again, not financial advice per se, but would definitely suggest you stick to leaders which show relative strength versus sticking to things which are consolidating or moving sideways, since that might take more time and there's an opportunity cost of your deployed capital had you stuck to those which are uptrending already compared to the average. So we're going to take a look at some charts which are showing some relative strength. Again, it's up to you to DYOR and TAYOR. Do your own research, trade at your own risk, implement your trade plan through technical analysis, given that a lot of what we're seeing now is still in the step of pattern recognition. Only through pattern recognition can we ascertain a technical-based entry of which we can operationalize and take a position. Hindi sapat na, oy, uptrend, bilhin ko na, or oy, above moving averages, bilhin ko na. You need to identify what particular pattern is unfolding and then operationalizing based on your system or setup to be able to participate in that. So, with no surprise, I guess, given all of the participation and fund flow into the space, AXS or AXI is something interesting above your 20-day moving average. I would like to see it consolidate or base out or hold that level before maybe taking a probe position. But if that would break, probability-wise, maybe it's going to be a sharper correction as we retest maybe the 50-day EMA or maybe even the 100-day EMA. Luna, something that is basing out in some sort of a cup formation. Maybe we're going to see some sort of pause or handle form, but generally also above your EMAs. We just have that previous high or resistance level at around 18 to 20 levels, but something interesting to take a look at. Solana, also something basing out and in the past 5 days pausing above your moving averages. Maybe we would see moving averages expand, meaning they fan out as your shorter term moving averages go above your longer term moving averages, and that would be good. Because the challenge when it's generally sideways and your moving averages are nagspa spaghetti, note that moving averages are a lagging indicator and they're more used in trending environments. So if it's a sideways environment, they're kind of moot. So what we'd like to see is some sort of EMA expansion. Same thing for ADA as well, just sort of basing out, finding some sort of support and corrective structure Again, these picks are pretty much our way of saying check these out, not necessarily suck and buy now. We have to be judicious about operationalizing our trades, especially in an environment where it's generally still basing out. You have Matic as well, looking similar to the past two charts, and maybe we could see a breakout from that diagonal resistance level over the next few days or weeks. OGK, only God knows. We follow price. HNT USD, similar chart as well, similar analysis. H bar, similar analysis as well. Just basing out above your EMAs, could rally, retest previous high before a possible move higher, one step at a time, and follow price and let that present itself. CHR, also something which based out and now is kissing your 20-day EMA. I'd like to see this level hold. If not, maybe we'll see a sharper leg down to your 50, 100, or previous low. Yeah. So I think in summary, for this crypto conversations we're having this Wednesday, EIP 1559, something important insofar as the fee mechanism and structure is concerned. But the most important takeaway is that it's not about the catalyst or the event. It's how prices and the market respond to that. Despite it being a generally positive catalyst, knock on wood, if Ethereum like starts gapping down and breaking your trail stops, edi syempre we have to be judicious, stick to our plan, and take profit or cut loss, depending on your system. But generally, that's it for this Crypto Convos, guys. Maraming salamat. And just a few announcements before we move on to Q&A. I'm sure you guys have some clarifications and such, but generally speaking, that's it for this month. And special announcement for those interested, there are weekly, monthly, free resources we post on our Open Journal YouTube page. So maybe Matt or Jessa, if you guys could be kind enough to put the link so people can like and can subscribe for more info, which is free. You can check it out. And please click the bell and enable turn on notification para walang FOMO when we put in new content here free to everyone. Please check it out. And of course, syempre, we open our Open Journal family and community to everyone. We're opening it to you. We have a lot of cool stuff in store. And just recently, we now have our brand new, guapo looking trade process map. Thank you, Jessa, for helping operationalize that, which complements over around 20 plus hours of condensed video, our condensed town halls, which are now around maybe 2 hours na lang. So imagine, guys, 20, 50, 100 hours of content by Matt, Javi, and I, now condensed to bite-sized videos for you to watch. We get a lot of questions na, how do I catch up? OJ's been around for 2 years already, and how do I catch up? We have our trade process map and our condensed videos for your viewing pleasure. So with that, guys, maraming salamat. Thank you. And we open the floor for any questions or clarifications about this discussion or about the space in general, but we'll try to make it relevant and stick to the topic we discussed at hand. Thank you. Thank you.
Hello. Hi. Thank you, Joseph. Thank you for your presentation. And now, as what Joseph said, no, we are opening the floor for your questions. I learned a lot about that, and exciting, no? Tomorrow na yata, exactly 23 hours from now, we expect.
Yeah, super interesting.
While we wait for some questions, let me share the screen lang in relation
Sure,
to
sure.
the EIP 1559.
Yeah, I'll stop sharing so you can share.
Sige, thank you. Tanong na kayo, guys. Ask questions while Joseph is still here. We'll take questions siguro until around 6, depending on how many questions you guys have.
Yup.
So on the screen right now, we just want to inform everyone watching, PDAX users na mga ka-PDAX, na since the Ethereum Foundation is set to undergo the London hard fork, withdrawal and deposits will be temporarily suspended starting August 5 at 4 p.m. Philippine time. But you can still trade these coins. No problem with that. It's just that if you want to withdraw or deposit, we'll temporarily suspend it now, just to make it more predictable after the gas.
Nice.
So, yeah.
Kyle, I have a question here. I think someone sent this privately. And
Sure.
this is also a question I've been getting in the past in relation to any kind of catalyst or event or interesting development in the space is what's going to happen? People ask, how do I adjust my trade plan to something that I don't know will happen? Especially Joseph, di ba you characterized nga 50-50, pati ikaw, you're not entirely sure what would happen. Meaning, it could go higher, it could go lower. To what extent it's priced in already at the moment, we can't answer. Wala tayong crystal ball. But the way you build your trade plan around that is to be able to understand that variable change or things that you don't know what might happen should always be accounted for in any trade. Whether that be a long or a short, you need to have your stops in place, your trail stop to be able to protect your profit. You need to have your stop loss to cut your losses small and not allow it to snowball and compound into a big loss, which would be bad for your portfolio, since assuming you don't add capital, it would take more gains to have to recover the losses. So I think these are just some things, especially position sizing as well. This is something that Matt and Javi and we share to our community. If you're uncertain about a position, your position size can also reflect that uncertainty. Taking tranches, probe positions, being able to deploy in increments, deploy 5%, 7.5%, 10%. Di naman kailangan saksak sa jugular, all in 100% all the time. We have a few questions here. I'll try to answer a few before 6 to respect everyone's time, and I'll focus on the ones that will benefit 70-80% of consumers. So first one, very quickly, this Open Journal related question from James. Hello, is Open Journal now focused on crypto or still on equities? So short answer, James, is we're heavily focused on cryptocurrency, but we still do focus on the local market, and that's primarily headed by Matt Flores, Alamat Flores, but generally crypto and blockchain. But we're of course still heavily giving insights and research in local. So both of those, crypto and local market. You got that right. Thank you, Habs, for the clarification as well. I think scrolling up, there's also a question about Ren, kakapasok lang. Welcome, my friend. Better late than never. Possible ba bumagsak yung value ng coins after the London hard fork? Yes, it's possible. So it really depends on how the market will perceive this event. But to add to your point, it's not about the event per se, but really about how prices would react. So you're spot on there to see that if prices go down after that, then the market, by virtue of technical analysis being a leading indicator, or price being a leading indicator, by virtue of technical analysis, a period of 6, 12, sometimes 18 months, price is telling us something even before the event or the catalyst comes to fruition or doesn't come to fruition. So tama ka dyan, bro. let's follow price. Hopefully you're wrong. Hopefully things don't go down, things stay steady or go up. MJ, about existing wallets. Again, thanks CoinFam for the support. No strict answer to that. It really depends on your wallet, but majority of the wallets I would use and I've seen, you'll get an email from them on what's gonna happen, like if their services will be down for a certain period and stuff like that. Don't worry. But generally speaking, there's nothing you have to do insofar as your coins are concerned per se, since your provider or your wallet or whatever service or platform you are using, it's up to their responsibility to comply with that, and they obviously would in to transition to EIP 1559. But wallet per se, just wait for the email. You can reach out to your customer service representative if you haven't gotten anything back on that just yet. But yeah, your coins are going to be fine. Thank you, Habs, for that assist. Yes, I think in that interview, some people were talking about and stating certain scenarios or worst cases with regard to Ethereum or the blockchain not being ready yet for this, or bad things possibly happening. And this is an oversimplification of what I read and absorbed. There was a bug or something to that effect on the test net, and people are speculating, oh no, what if when it's now live, the bug comes back and things like that. But when I was reading it, well, firstly, these things happen all the time. There is no 100% seamless transition, especially when it's a huge upgrade. And this manifests itself not just in cryptocurrency, in any kind of corporation, any project, any business trying to do something new. May birth pains yan, and there's always going to be a variable change and things which can err. But insofar as a potential bug being there are measures already in place to deal with it. Something about whitelisting particular nodes which are affected, or being able to troubleshoot certain delays which might come as a consequence of such. So this is me stepping in or speculating. Maybe if there's a problem, then systems would be down, maybe for a bit of an extended period of time. But of course, that would depend on the severity of what could go wrong. But all things considered, these are pretty competent, smart, the best people in the world doing it. I'm sure they have plans in effect, change management nuances to troubleshoot what could happen. You can check out that article, which talks about another side of the spectrum about what could go wrong and certain ways we can troubleshoot from that. But yeah, I think with that, bro Kyle, just so that we can respect everyone's time, since people came early and we can end on time as well, we can end the session. And for any questions I might not have been able to answer, shoot me a message on like Instagram, Twitter, or InvestaChat, preferably Twitter or Instagram. And guys, we also want to invite you to our Open Journal Lite Investograms group. If you're on the fence about joining, paying for a premium subscription, no worries. May pansit kami for you. May libreng pakain. Our Open Journal Lite free Investograms group, which the link could be placed below for those interested to get a taste of what our community is like and research that Javi posts, etc., etc. With that, thank you, Kyle. Thank you, everyone, and have a great balance of the week and hoping for the best for the markets and this rollout. Peace and take care.
Thank you, Joseph. And with that being said, thank you everyone for joining. Nandyan na sa baba, the comment of Matt for Open Journal links. So check it out if you want to join. And yeah, we'll see you next, at least I'll see you this Friday naman for our Crypto News Weekly at 5 p.m. same time on our Facebook page and our YouTube. So with that, thank you everyone. Have a good evening. Bye bye.